Welcome back to the Beers and Buying podcast. We've got Brad Haining, who's back again, second guest already. Wowzers. I know we're going to change it up a little bit today, and we're kind of going to go down a different track. Really thought it'd be valuable for people listening out there looking to buy their first home, that we could just undertake what the whole process looks like when you're buying your first property. So kind of like a guide to how do you get into the market and what does it look like. But before we do that, mate, let's just, as we always do, let's crack it off with a beer. Cheers to Bolter. This is their XPA. No, we don't have a signed deal just yet, but that's to come.
Big
so
enthusiast.
Happy days. Alrighty. So, mate, let's kick things off. And I just thought it'd be good, obviously, reintroduction to you, Brad. Partner within the Arch brokerage business, mortgage broker, tons of knowledge. I thought today, obviously, we deal with a lot of first home buyer clientele. Yeah. We're very good in that space. We know a lot of the grants and schemes and all that sort of stuff. But I thought what we could do is just let's break down what's the start of the process when you go to buy a property. So I'm a client. I come to you. What does that kind of look like, that first stage of the process?
Yeah, generally it's someone will come through either social media, you get a call, referred by a friend, come through the website or whatnot as well. Generally, they may have Googled a few things, may have spoken to some friends that have been through the process as well, but generally, and sort of rightfully so, most people are pretty green when it comes to buying their first home. Mm-hmm. So they'll come through, have a quick chat over the phone with them, sort of see what they're looking to do, see what they're thinking, and try and get some sort of early information from there.
Yep.
From there, we get them out an online pack, so it's great because it's all online, no sort of forms to fill in and sign. Takes them about 20 minutes to complete all of that, and that'll gather all their information like, employment history, address, their sort of assets and liabilities.
Which is important because, the reason that they kind of ask that sort of stuff normally is it allows us to gather the information, then to do the credit report, right?
Yeah. So that's something that we do in the initial stages as well. So we get a credit report, which will have your last 2 years' history. It's got all your, any sort of
credit cards, gas, telephone bill. So it's really important to keep those in order too, isn't it?
Yeah, it's quite comprehensive. And as I say, with the 2 years, you need to make sure that you're sort of keeping things in order as well, because that can quickly eliminate certain banks and sort of limit what you can do as well. So we gather all that information. We've got the income documentation that comes through as well. And then from there, we sort of look at, okay, this is how much you can borrow.
Yep.
Now, depends on what that amount is and where that sort of fits as well. And then that, may allow them to sort of buy under the schemes and utilise the grants as well. So whenever we have that initial chat, we're sort of thinking, they sort of say, looking to buy a house maybe in this area, or, we're going to build and that kind of thing, which for us, deal with a lot of first home buyers. You already know, okay, they're going to fit into a certain segment there. Figure out the borrowing capacity and where that is at for them, and then sort of work back on, okay, if you were to purchase a home of X amount,
how much do you need?
This is how much you're going to need in terms of savings, which we can sort of see there, what they've entered. We've got their statements. It's either that or they're utilising a family guarantee, which is super popular these
especially
days.
At the moment, right? Yeah,
because that'll eliminate mortgage insurance, allow them to also capitalise the costs such as stamp duty if they are going to be applicable as well into it. And then they can get a foot in the door with essentially no savings there.
And I think one of the key things that obviously happens in that first stage is so we collect all the docs, and usually it's, we get the ID, we obviously get the online form filled in, which gives us an understanding of, do they have liabilities, what's their asset position, how long have they been in their job, and what that essentially then allows us to undertake is an assessment of okay, which bank's policies are these guys going to fit first and foremost? Which then allows us to understand, well, what's their borrowing capacity going to be with them? And so borrowing capacity is usually made up of income versus outgo, so it has to do with expenses. Now, obviously, there's a thing called HEM, which we could probably dive into a little bit, household expenditure measure. which is essentially done based on certain banks have different HEM measures.
Yeah.
But it depends on, if you're single or if you're in a couple, how much you're earning, sometimes even what postcode you're in.
Yeah.
The bank will actually allocate what they think your minimum expenses should be. So that's kind of like the floor of what they use for your borrowing capacity now. Some people sometimes have their normal day-to-day expenses over that figure, which then the bank would take that from an assessment standpoint. Some of the really key ones, which are outside of HEM, are things like, private health, life insurance. What else have we got there? Body corp with some as well. So buying a unit.
Some lenders as well. So especially when talking to first home buyers, and there's been some recent changes with a couple, CBA and Westpac being that, and they do a lot. They do really well in the first home buyer space. But if you go outside of that, if you were to purchase a unit and you're paying, could be $400 or $500 a month in body corp,
which is pretty common, right?
Yeah. All of a sudden, you could be borrowing $50,000-$60,000 less, and all of a sudden you can't actually buy that property if that particular lender is going to sort of treat it that way. So, private school fees as well. That's something that factors in there. So I think it's then that's why we. It is only sort of 15, 20 minutes or whatever, but it is quite detailed of what clients need to fill in, and it's because it can have such a big impact, and we want to make sure that, we're going through it once.
Yeah.
We don't want to be like, okay, this is great, you can purchase this home, and then more information comes to light, and then all of a sudden, it can drop
massive changes, right? And you want it to be accurate. You want at the end of the day, whenever we're sitting down with people, we want to be able to walk away with them to go, this is pretty much exactly what it's going to look like.
Yeah. And there is quite a range as well, like whether they're utilising, say, the first home scheme and things like that, through to, if they were going outside of those lenders. It's, whenever we provide that range to people, they could be borrowing anywhere from $550 with one lender up to, just over $700,000 with another. And that's, particular customer profiles sit differently with every single bank as well. So, you want to make sure that your borrowing capacity is there, have as many options as you can, and then working out who's going to be the best for you. We have clients that come through and you end up sort of helping the whole friendship group and that kind of thing. And, they'll talk, but, say between the 4 or 5 of them, they've ended up at 4 different banks, basically based off their own, all utilising maybe the same thing, but different sort of needs and that kind of thing, different
financial situations. Yeah, totally.
Yeah, exactly.
It is, the one thing that I have noticed recently is just like some disparity between what you can borrow with one lender compared to another. Like, I just feel like that gap is getting wider and wider. Yeah. Some have the buffers built in, some of them wind them back. So yeah, it's really interesting. So we go through that first step of the process. We gather all the information. We do a credit check, make sure that the clients, everything's all good and in order. They've got a good credit score. There's no defaults or anything like that on the file. We've then undertaken an income assessment, making sure that we've got all their income correct, what's their outgoings, and then we land on a figure of what the client's borrowing capacity is.
Yeah.
And then we work backwards whether there's a guarantor involved, which in some instances or most instances means that the clients don't actually need to chuck in any money.
Yeah.
And then in lieu of not having that, then it's kind of like, okay, well, hey, here's your savings goal. Now, 1 or 2 things happen there off the back of that, right? One is that the client's already got the money and they're ready to rock and roll.
Yeah.
Or it's a matter of we've given them savings goal, something tangible to work towards, and then they go away and save. Let's just take everyone through what that then next piece of the puzzle is, because realistically then it's like once they're ready to go, it's choosing a lender and pre-approval, right?
Yeah. Yeah. So we've done quite a bit of research, I guess, going back to them with options of the banks, sort of detailing out why these specific lenders have been chosen. Sometimes people will have a bit of a preference. They'll go with a certain bank based off
whether they've got offset accounts, whether it's
it could
fixed,
be multiple
regional,
accounts. It could be a really good fixed rate at a particular bank, and that's what they feel sort of suits their own sort of risk appetite as well. And then for us, and I think what isn't probably done enough is getting a pre-approval in place for them as soon as possible. So pre-approval is you've submitted everything to the bank, The bank's had a look at it and gone, outside of the property that specific property that you're selecting, we're happy with everything else. And that allows you to, and I think why it's really crucial, obviously a lot of our clients are in Southeast Queensland, is tightening up your contract terms will be the difference a lot of the time between, and we speak to a lot of buyers agents, selling agents as well. That is sometimes, just as important as the price.
Yeah.
And especially if you're a first home buyer and you're looking up to, you're going to be within a sort of certain price range, you're going to be competing with other
First home buyers
as well. So like what's going to make yours stand out, when it's 2, 3, 4 grand difference in prices.
Yeah.
If you go up there with, a 14, 20, even 20, some people putting in 21-day finance, you're probably just, or if you are going to get accepted at that, you probably find that it's because you've paid quite a bit more than someone else.
Yeah.
So those contract conditions and the pre-approval allows you to, bid confidently on a property, make a really strong offer. You could go with 7 days finance, depending on how quickly a bank's running. But, we're in contact with the client, quite a lot throughout that process, whether it's providing property reports, hey, we're looking at this property, we're about to put an offer down. Although we send them the information initially, we still work through the offers with them. Tell them, what to sort of ask the agent as well, a few things that can really help their offer, and also show the agent that, these guys are quite serious as well. Because that's, that selling agent, although you're not, they work for the seller, they're going to the seller on your behalf, and they're either going to advocate for you and say, look, this is really strong, or they're going to be a bit and ahhing, and like, if someone's selling the biggest asset of their life, they're probably going to go with where the confidence is as well. So
that comes through on paper, right? Which is pretty much exactly what you're saying. But like, I think if you're going in there confidently, knowing that, all right, I'm putting 7 days finance, you've got your solicitor's details within that offer. You've got your building and pest. Your deposit looks really good. You're not putting $1,000 down or $5,000 down or whatever. As long as the total deposit, when I say total, I mean, initial and then balance deposit. As long as it's not a small number, that's going to instill confidence in the selling agent whenever it comes time to show that offer to the seller. And I think just it shows preparedness. It also shows, obviously, they're not asking for a pre-approval letter from you. But I think that having those things all lined up, I think it just shows that you are ready. Because, especially in the market we're in at the moment, there's, I'm sure, plenty of offers getting chucked in on properties, probably some of them just willy-nilly, no advice, maybe no pre-approval. People are just fishing to try and see what the potential value is on that property. So, having those things tidy up is going to be a massive game changer, whether you get the property or not.
And especially like in recent times where rates have gone up, agents know that rates going up means borrowing is less. Probably a little bit different to those sort of COVID times when we had like really low rates, but like as rates go up, things do need to be reassessed, and what someone could borrow 2-3 years ago doesn't mean that that's what they can borrow now. So, agents do ask nearly every time, have you spoken to your bank or broker?
Have you got a pre-approval?
Have you got a pre-approval in place? And, rightfully so. They've got to ask those questions because, you'd want them to ask those questions if they were selling your house. So,
100%.
I think just putting yourself in the absolute best position, because it can happen really quickly. Like some clients,
100%.
they'll take a year and a bit to find a property. We've worked with some for 2 and a bit years while they sort of search for the unicorn. But clients can come to you and then 30, 40 days later, they're all moved in and unpacked. Like it can happen really quickly, and I think you need to be prepared that if you do find that property early in your search, that you're confident that you can get it as well. Because it can be quite disheartening when they have offers that are knocked back, and you sort of maybe they'll work with a bank or someone else previously and that kind of thing, and you sort of go through the situation, and maybe they just weren't in the best best spot or armed with
Yep.
the right information.
Yep.
Because we know we give them a few key things to ask the agent as
Yep.
well.
Yep.
Which again just sort of shows that you're active and ready.
So winding that back into kind of where we're at in that process. So pre-approval is obtained.
Yeah.
And then usually they're valid for 3 months,
Generally,
right?
yeah, 90
Yeah.
days is probably like your average sort of mark.
Sometimes, and it's there usually at that point in time when you've got them pre-approved. Like, obviously, it's ideal that they use that at that point in time. But to get them reapproved really isn't that difficult.
No, getting a pre-approval redone is not, it's not that hard, and a lot of them do it as well if they don't find it in that space. But yeah, generally, like once that pre-approval's in place, especially first home buyers, like they're excited, they're active, they're looking.
Yeah, it's very. I'd say it's probably pretty rare. Happens every now and then, but it's pretty rare for us to do multiple pre-approvals. Like, I feel like the guidance that we usually give the client at that point in time, especially with the property reports, those sorts of things, and having advantageous conditions within their contract, usually they're buying within that 3-month period, right? So someone's all pre-approved. It's time for house hunting. We've kind of just run through the contract conditions, but let's just dive a little bit deeper into that anyway. We've talked about finance, right? So the whole idea of finance is it is a condition within the contract to protect the buyer. So enables them to get out. So maybe they put down a 10 grand deposit to start with.
Yeah.
That obviously secures the contract. Then let's say we go 7 days, which is a really common one we're doing at the moment, sometimes shorter, but let's say it's the 7 days. Essentially, whenever someone signs that contract, they then got 7 days to go what we call unconditional, right? So everything being all done up to that point, pre-approved, just run us through what those next steps kind of look like in getting it unconditional.
Yeah, so the client, we always suggest that they have a building and pest clause as well. You can have seen 1,000,001 properties, but you don't know what's sort of lying underneath sometimes. So you get a professional in there to do that. Might sort of cost you anywhere from sort of $600 to $700 or something like that. Worth its weight in gold. So you have a condition in there for that as well. That report comes back to you really quickly, and you sort of know what you're dealing with. Then you're happy with everything in the property.
Try and get people to go through it as well, like with the building inspector. I know we give that advice quite often because those reports can be long.
Lengthy.
Yeah,
and they're done by, they are super comprehensive as well. So
which is what you want, right?
Yeah, and we find that the people that our clients use as well will sort of go through it with you as well because as I said, you don't know what you don't know, and a common question that we sort of get them to ask is, if you were buying this place, is there anything on here that would really stand out to you?
Yeah.
And they'll go through that with you and sort of explain everything. So you've got your building and pest, you're happy with the condition of the property and that kind of thing as well. And then the bank's gone through. Sometimes I'll do a valuation on the property as well. So that's come back at the contract price, let's say.
Which is the most common thing right now, right? I think that's a common question we get. Oh, how much did it come in at? People hope that it's coming over.
Rarely will a valuation come in. I've probably
when there's a purchasing involved, right?
I've probably seen a couple in the last 12 years. Which is because they just don't need to do that. So that's come in. You're all good to go. So once you go unconditional, we contact your solicitor, let them know that it's all ready to go. They'll speak with you and confirm everything. Once you're unconditional, then you're set on buying the property.
Get the photo in front of the house. Pop the champagne to say I'm unconditional.
And then
which we love celebrating, by the way.
Yeah, absolutely. We love going on the journey. And then loan documents are issued by the bank. Thankfully, these days, a lot of them are electronic, including the mortgage document as well, which is super helpful. So documents go out to clients. They have a read through. We catch up and sort of go through any questions that they've got before they sign off.
And at that point in time, like even backing up to that pre-approval stage anyway, we would have went through variable rates. We would have went through fixed rates. We would have went through offset accounts, redraw. We'd have explained everything. I know one thing we're big on is education, going through all the ins and outs so that people can make the right decision to go, cool, I know exactly what I'm signing up for. So when those loan documents do come, obviously we would have already picked that when we lodged the pre-approval. But when we're going to unconditional and when those loan documents come out after the fact, it's kind of like, okay, cool, I knew I was going with this bank. I wanted a variable rate. I wanted access to multiple offset accounts. So, that just allows us to, tick that part off as part of it all.
Have, confidence in, and we break everything down for them in sort of terms and ways that they will understand as well.
Yep.
And I think that's why, we've heard someone speak recently about, who's a pretty prominent figure in the industry about pre-approval conversion rates being, 40-something%. And we were like blown away, because it's like rarely will a client sort of come through and then not purchase with their pre-approval.
So it just makes you think, doesn't it?
They need to be confident in that. And we do spend a lot of time with clients on going through multiple different scenarios, making sure like they understand everything. And I think that really gets them, because it's a massive thing for them.
Huge.
And they come in pretty stressed, to be honest, most of the time. But you sort of see them relax a bit. And it's just that confidence, I think, that they have, that they can actually get out there and do it. And
not us just putting a pre-approval in for the sake of putting a pre-approval in, like, and talking through the facts of you've got 3 months. You don't have to buy the place in 3 months, but like, are you ready? Do you want to go on the journey of buying a property? And that's kind of when we'll push the button on it, really, isn't it?
And it's always, it's always on their time. They're always comfortable with everything as well. So I think that's one thing that we do really well is the education piece. Because, you're not really going to probably know too much, really, coming into it all.
And there's no expectation to as well. Like,
no.
That's the thing is...
Things change every day. Like, we get emails every day, and, like, what was probably going to happen yesterday, now we're going with another lender because of a change. So
policy, interest rates.
You're not meant to be keeping up with everything that's going on as well. So, and that's what we say to them as well. Like, that's why we're there.
That's our job.
Yeah, to keep on top of everything, make sure we're across all the industry changes, the bank policy changes, pricing, and just sort of put them in the best position.
Yeah.
Really.
So they've gone unconditional on it, which means they've satisfied the finance condition, which is usually just a valuation if we've got them all pre-approved. They've checked out the building and pests. They're happy with it. Sometimes, if there's things within that, there's potential to get, price reductions and or get it fixed before going unconditional or before settlement. So at that point, they're unconditional. They're ticked off. They're happy with the property. The bank's happy with them. They've done their final check over. Then the loan documents go out. They sign the loan documents. I think really the only thing from there, within getting it from document signed to ready to actually settle on the property, is generally just like the insurance, more so than anything else.
Yeah. So especially like, in Queensland's certainly a little unique in this way that, once you sign the contract, unless it's stipulated otherwise in the contract, that you are responsible for the building itself as well.
Yeah.
Once they've signed the contract, solicitors usually told them already, but make sure they know they've got to have their building insurance in place, and then they can add their contents cover basically for settlement date.
Yeah.
But those are the few things that we go through that just make sure they've got all their ducks in a row, make sure the loan documents are back in a sort of suitable time frame to give the bank enough time to be ready to settle.
Yeah.
And then
let's break that down really quickly, because one of the really common questions I get, I'm sure you're probably the same, is, all right, everything's ready to settle. Where's the money?
Yeah.
So I know that let's just break that down for people, how that actually works whenever it comes settlement time. So, you get to your 30 days being the most common in Queensland. You get to 30 days from your contract today's settlement date. Let's just take them through how that next phase works whenever it comes to settlement.
Yeah. So, and probably, thankfully as well with technology these days, it's all done through like an electronic settlement system that, your solicitor, the seller's solicitor that's acting for them as well, all the disbursement details are put into there as well. So there'll be the remaining let's say you've put down a 30K deposit or something like that. So, and that's one of the other things. So your initial deposit counts towards your overall contribution. So that's taken into account. Everyone's got all the figures lined up there, and then money's dispersed to the seller. The bank's provided. The bank's also obviously in the system as well, and confirming the amount.
Office estate revenue, real estate's paid,
so
any rates, all that sort of stuff that goes into it.
There could be rates owing as well. So your solicitor will go through all of that with you. And then it's all completed electronically, which is really good. It sort of takes out a few errors that maybe used to happen from time to time. And then you'll get a call.
The old bank checks day, you'd get to settlement and someone would have issued the wrong bank check and you'd be running around like a headless chook trying to get another bank check raised and off to Gaydon's or one of the in the city somewhere.
Which is and then once the bank's confirmed that settlement's happened, you'll get a call from us. You'll no doubt get a call from the...
Try and beat them to it, the solicitor. Try and. Doubt you don't beat them much, but every now and then you get a win.
Yeah.
So the key there, right, is that the only thing that the client usually needs to do, if there's a shortfall, usually it either goes into a bank account which they've nominated as a shortfall from the bank's perspective, or they've put it into the solicitor's trust account. So outside of that, the system and the conveyancer really does the job for them, allocates all the money where it needs to go. They don't need to worry about, oh shit, I need to pay money to this person, pay money to this person. It's all kind of taken care of.
Yeah, and that's what you always want to have a good solicitor or conveyancer doing there. Then settlement's complete. The worst part, moving in.
Moving.
That's the
get a mover, get a removalist.
Yeah, always. And then
keys. Drive off, go and meet the real estate, go pick your keys up. Make sure you organise it. Actually, let's take a step back really quickly. Pre-settlement day, or on settlement day sometimes, usually it's a couple of days before, but you do your pre-settlement inspection.
Yeah.
So, which is usually within your contract to sale somewhere. The fact that you get to actually go and inspect the property before you actually move into it, make sure that something hasn't drastically changed. There's a big bloody hole in the wall or something like that's popped up. So make sure you organise that. Usually the real estate will organise that with you anyway. But
I'll go through everything there and you confirm that with your solicitor as well.
Sort
of post settlement. So you'll hear from us, and then what we do is give it a sort of few days to clear. We confirm everything with the bank. So we confirm if you've got an offset account, it's attached. If you've set up an automatic repayment, it's confirmed. This is where it's coming from. This is on the date. These are your loan details as well. And then from there, obviously, they're sort of going through the initial stages of sort of moving in and that kind of thing. Mm-hmm. But then ongoing, always available for questions and things that may come up as well. And a lot of clients do reach out. They've got a question, and we try and do as much as we can for them so they don't have to do anything with the bank.
One thing that we do really well, which is on the anniversary of their loan. So obviously they move in, happy days. The one thing that I think we do really well as a brokerage is, we continue to review their rates and situation every 12 months. So one of the really good things there is, we'll contact your lender, we'll see where your interest rates are at, we'll compare that against the market. Are you on a really good rate still, or other potential opportunities to potentially refinance, which we can go into much deeper another day. But ultimately, you're doing it to gain a financial benefit, so you're paying less interest and less monthly outgo is going to the bank. But also, one of the things I really like that we do is we obviously send out a property report, and one of the key things there is it lets people understand, has that property gone up in value, which is ultimately the creation then of equity, which can be used for a number of things, right? It can be used to renovate, debt consolidate. It could be used to buy another property.
And I think, look, if a client's taken a fixed rate, we, depending on, that might be a year or 2 years, we're also keeping an eye on, okay, that's coming up. You will hear from the bank, but, we're sort of looking at, do you want to refix it? Is it going to be on variable like the rest? And I think that's, the ongoing support that we sort of give out as
Yeah.
well.
Keeping the banks honest, really, isn't it? Ultimately.
Yeah, sometimes it'll, you go back and you can't get a better rate for the client. They're still really happy at the bank, so that's fine. You sort of leave it where it is.
Yeah.
Other times, you go and get 0.1, 0.2 off, which, sounds like a really small number, but that could be thousands
Yeah.
a year back in
100%.
your pocket. And, why shouldn't it be in yours rather than theirs? Yeah, we definitely push really strongly and use whatever relationships we've sort of got to get customers the best deal now, and then also moving forward
Yeah.
as well.
And I think one of the things is, and we know this from our bank days, is the fact that even though your LVR, which is loan to value ratio, which is, the percentage you've got borrowed against the property compared to what it's worth, some of the banks actually don't change that up as your equity goes up. So, and what we mean by that is essentially, let's say I went and borrowed 95% from Westpac.
Yeah.
Over the space of maybe 1 or 2 years, maybe your equity is, or your LVR is now 80%, which is a really sweet spot because it means, no mortgage insurance.
Yeah.
Pretty much all the lenders will want your business. But you might be going to Westpac and they might be going, well, you know what? Well, we've still got you at 95% LVR. There's no real way for the system to check all of a sudden, oh, wait, your equity position's actually really strong. We're going to offer you a really good interest rate. So I think that being proactive within that space is just going to ensure that the client is in the best position possible, that they're not stuck on a rate maybe they got at 90% or 95% when they were paying mortgage insurance, which we know means that they're going to be stuck with a higher interest rate, more times than not. So,
which happens a lot in the first home buyer space as well.
Yep.
Is this smaller deposits and maybe sometimes they're paying a bit of a higher rate, but it's also about
bank thinks they've kind of got them by the balls, that they can not that they're charging that willy nilly, but it's just like there's I feel like sometimes that there's no meeting in the middle to go, you know what, we can see your equity position has improved, we're going to offer you this.
Yeah, and we work. It's this is where you're probably going to be for the next maybe 2 years, maybe a bit more. Let's work out how much more you can pay a week to pay down that loan a bit quicker. So hopefully as your property price goes up and you're paying more on your loan and that goes down, we could get you out of that situation quicker. So a lot of the times we have like a longer term plan as well, especially with like those loans where they're paying a bit of a higher rate. You want to make sure that you get them out of there and onto something that's probably more suitable and matches what their current sort of figures are.
Awesome. Well, look, I think that that's a really good roadmap for, everyone that's listening out there or watching out there, to understand, well, what is it going to undertake and what's kind of the process with buying your first home, or maybe it's your next home. Some things definitely to look out for, but just even questions to ask your broker of how they manage the process even after you get into the property. I think it's important to align yourself with the right person that's going to continue to look after you. But yeah, I think there's a ton of value there. So, Brad, thanks so much for coming on, legend. Good to see you again, and we'll have another beer soon.
Cheers, mate.
Cheers.